Hey everybody, and welcome to Accounting and Accountability. My name is Amanda,
I'm Nelson.
and this week we have two interesting stories.
Yes, all about
run-
earnings.
All about earnings. So it's currently earnings reporting season right now,
Yes.
and across Australia, lots of big companies are getting ready to release their results. The big one we want to start talking about this week is Qantas,
Right.
which has recorded a massive profit. How much is it?
Yes, the big flying kangaroo reported a massive $2.47 billion in underlying profit, which is kind of like their own definition of profit that is like ongoing. A little smaller when they actually provide their statutory or their profit based on accounting standards, which was about 1.74 billion.
And this is really interesting that, they have what we call statutory profit.
Yep.
So we have international accounting standards, which have been translated into accounting standards, which are supposed to allow every business's profit and revenue and expenses and assets to be measured in roughly the same way so that we have comparability.
Yeah.
And then you've got the business saying, well, we have this other me profit measure.
Yeah, a profit that the business themselves came up with. And it kind of gets rid of things that they argue, they're not going to happen every year as a one-off. Like, let's say if they sell a part of their business.
All very subjective.
Very subjective.
Very subjective.
But the point is they've done pretty well. And this comes off the prior year when they made about a $1.86 billion loss.
So they've turned it around. 200% almost.
And so why is that?
Well, there were two things. Number one, we're starting to go places more, so there's higher demand.
You've been around,
and
you've travelled, I've travelled.
Yeah, if you've bought a ticket, you'll notice it's much more expensive than it was in the past. So
Absolutely.
Ticket prices are definitely more expensive. A Sydney to LA used to be about a $1,500 ticket. It's now closer to $2,500, right up to a little bit more.
Absolutely.
But it does look like they're actually making reasonable money based on some of their statistics.
Absolutely. So if you think, $2.47 billion doesn't really mean much, but let's put it in context. So if we measure how much their profit was compared to their assets, their invested capital, so things like their planes and their headquarters, and anything that they own, they use to generate money, they made a really great return, basically 103.6%.
Whoa, hang on a second.
Yeah.
But before the pandemic, their return on their assets and their investments was 20%.
20%. So we're talking about 5 times increase.
500% increase.
In their returns. So it seems like a really, really good result. But it's not quite that simple.
Well, they have assets, but assets can be different in different companies as well. So we know that they have lots of planes, and they've done refurbishments of the fleet, but the average age of a Qantas plane that they lease is 15 years.
15 years.
Whereas Virgin has about 11 and a bit, so 12 years.
Let's say 12 years.
So they're slightly older planes.
It's an older fleet.
Which might mean that they're going to need to spend more money
Yeah.
on newer planes, on refurbishments coming up.
So the thing is, their current planes are going to be depreciated by a lot more. They would have lost a lot more value, which means their invested assets is a lot smaller than their profits.
Oh, so we're changing the denominator.
The denominator in the
So as well as and you think about any sort of ratio, it's the numerator and the denominator.
Yeah.
And the numerator is getting bigger in terms of profit, but the denominator is also getting smaller.
Yeah. And so, and as you say, that means in the coming years, they're going to have to spend a lot of money buying new planes or refurbishing these planes. So that profitability, it's not going to stick around for long because for obvious safety reasons, you can't have a fleet that's too old.
You don't want to fly a fleet that's too old.
It start falling off or, during a flight.
And profit doesn't always equal cash either, because accrual accounting means that some things on profit don't actually flow through to the cash flows of the business. So Qantas almost doubled their cash from customer sales, but they also have started this investment process into new assets, paying back debts. And they also bought back shares, which I thought was really interesting. Why would you spend money buying back your own shares? But again, it's this thing of reducing the number of shares so that shares seem like they're worth more value.
Your earnings
to keep your share price high.
Your earnings per share goes up if you have less shares, even though you have the same profit. So you can see they've been very strategic, and they haven't actually, the dividend hasn't gone up or anything. So they've really thought about it strategically because they know a lot of their cash is going to be spent on these
saving money for their rainy day in the future.
So yeah, profits are great, but it's a question of where these profits are going, and a lot of them are going to basically
they're going to be reinvested. Yes.
Yeah.
Now, the other story we're looking at this week is supermarkets, Woolworths versus Coles. Those are the big two supermarkets.
Yes.
I myself normally am an Aldi shopper.
Okay.
So we don't get to see Aldi's profits.
A distant third.
A distant third.
Ferrari of
Woolworths had $1.62 billion profit, an increase of 4.6%. But remember, Woolworths is a conglomerate. It's not just Woolworths.
They've got many business
all
lines.
of their other brands as well. So the liquor, the hotels, gaming, etc. But there's been a lot more being spent on food.
Yes.
But we're having a cost of living crisis. And
Not
people
a good
are starting to cut back. How can a company be making so much profit
Yeah.
while people are struggling? And we're going to see this same story not just with supermarkets, but watch out for every single bank and insurance company.
Oh yeah, when
You
their
know,
profits
come out, that's going to be the
everyone's
same
struggling
question.
to pay their mortgage.
How are CEOs earning so much money when average people
Yeah.
are struggling?
Yeah, so we had the CEO, Brad Banducci, basically say that, you know what, it's because we improved our supply chains, our operational performance, and that's why we're making more money. Not because we're charging the consumer more, but rather we're finding ways to make our cost of living a product.
Packages could be shrinking too. Like the amount you get in each
shrinkflation,
shrinkflation, the amount you're getting.
Yes.
So while the price might not seem like much,
Yes.
in terms of difference, you might be getting less, which means to feed a family, you still have to buy more. I like shopping at the end of the day, sort of like 6, 7:30ish, because then you can get a lot of things marked down on special.
Yes,
Meat markdowns on special if you're going to go to Woolworths is the good thing.
Okay, I'll keep an eye out.
But Coles.
So Coles haven't done as well.
So Woolworths had a profit and their shares went up.
4%.
Coles had a profit, $1.09 billion.
Yes.
Still, look, it's less than $1.62 billion, but what's $500 billion between friends?
Plus Coles is a lot smaller than Woolworths. Woolworths is probably double the size roughly, because Coles is just their supermarket.
Just the supermarket. So it seems like they're making more money overall, and they seem to be doing better, but the share price didn't go up as much.
No, and so the issue was that there was expectations of higher profitability. Because their focus is purely on the supermarket sector, whereas like Woolworths has their different divisions, the supermarket sector tends to be a bit more profitable. And so Refinitiv, which is a market data company, they're expecting about 1.11 billion.
So you fall $900 million short?
It's a couple million here and there, and the market wasn't too happy with that. And so the reason was, funnily, although there was a 4.8% increase in profits, and driven by a 5.9% increase in revenue, costs actually increased by 6.7%. So costs increased by more than revenue.
And so this is where understanding accounting becomes really important, because you know that as you sell more, your costs are going to go up.
Yep.
But our costs are rising at a pace that's faster.
Yes.
Of course, Coles are now known very famously for the down prices are down campaigns.
Great advertising.
Still sits in everybody's memories.
Yep,
but
can't forget.
They've also said that there are 20% increase in costs related to increased levels of organised crime. Now, I don't think that this is drug cartels infiltrating Coles.
No, but it does sound cool. It does sound
cool, but I think organised crime is we're seeing a lot more theft.
Yes.
Because there's a lot more food insecurity. It's not like people are, stealing from JB Hi-Fi. They're stealing things that are essentials, and you're not really going to buy anything non-essential from Woolworths.
Absolutely.
And that just shows, the strain that are on Australian households and individuals as a result of this. And we've seen massive demand spikes at food banks and at the UTS Bluebird Pantry as well. So if you're a UTS student, don't forget that the Bluebird Pantry is open Tuesdays, Wednesdays, and Thursdays, where you can come down, register in advance, and you can get some free groceries to help you. As we understand times are tough. Yep. So the solution for Woolworths is how they're going to stop people from stealing stuff.
Yep. So in this case, Coles, they're going to need to spend more on protecting their assets. We know that part of accounting is internal controls.
Well, here come those airport security scanners when you go in and out of the store. Maybe not that.
Yeah, not that. Maybe like a few extra cameras, maybe a security guard at some of the bigger stores.
So spending a little bit more on surveillance and preventative measures to try and reduce some of that theft. Yeah. But that aspect of I talked about food security means that we have a more systemic issue across the whole of our society in relation to making sure that the minimum wage is appropriate, that the amount you might get on welfare if you can't find a job from the government
Absolutely.
is enough to be able to pay your rent and feed your bills. Pay your rent and feed your family.
Yep.
Because those types of pressures are what are increasing the rates of theft and stealing.
Yep.
All right, well, I hope everybody is having a good week. Next week, I want to talk about a company that debuted on the stock exchange and lost most of its value in the very first day through something called a special purpose acquisition vehicle. So I'm going to send Nelson off to research about that next week.
Yes.
And we'll chat to you soon.
Forward to it.
Bye.